Hello, hello. This is Mr. McCarthy. Let me scroll up. Sorry, it's so zoom. We're talking about types of investments. We talked about speculating. We talked about CDs and stocks. We talked about buying a bond, and we talked about mutual funds. So today we're going to talk about three things: exchange trade funds, futures, and commodities. So with exchange traded funds. So an ETF is a type of fund that holds multiple underlying assets rather than only one, like a stock. So when you buy stock, you're only buying stock in that one company. Or when you buy a mutual fund, we talked about mutual funds could be a bunch of different things grouped together. So because there are multiple assets within an ETF, they can be a popular choice for diversification. Want the ease of stock trading, but diversification benefits of mutual funds. Take a look at ETF, exchange traded funds, which combine the best of both. So that's what we talked about. The mutual fund is a lot of things put together where you're just investing across the board in several different things. And then a stock is very specific. So ETF, an asset that involves a collection of securities, such as stocks, that often tracks an underlying index, although they can invest in any number of industry sectors or use various strategies. So we talk about that stocks is just one thing, and a mutual fund can be several different items grouped together. So invest in any number of industry sectors. So when we talk about a sector, healthcare could be a sector, tech could be a sector. So it's just kind of a group where they would put similar companies together. So ETFs are in many ways similar to mutual funds. However, they are listed on exchanges, and ETF shares trade throughout the day just like ordinary stock. So that's the big difference between ETF and a mutual fund. So a mutual fund you won't be able to buy on the stock exchange. Stocks you can buy on stock exchange, and now we have this ETF which you can buy on an exchange. And we talked about the list of exchanges before. So here's the abbreviated version of how ETFs work. An ETF provider considers the universe of assets, so all the different assets, including stocks, bonds, commodities, or currencies, and creates a basket of them with a unique ticker. So he's creating this fund that has all these different things included in it. Could have multiple different stocks, could be some commodities, maybe bonds, and it's a way for an investor to put money behind all those different things. So investors then buy a share of that basket, just like buying shares of a company. Buyers and sellers trade the ETF throughout the day on an exchange, much like a stock. So there's a place where you can look them up. So again, the main takeaway, ETFs and mutual funds are similar, except ETFs are on the exchange. And typically you're going to find those on the stock exchange. You'll be able to find them. So let's check out our trusty NerdWallet website here and see what we've got. So let's we talk about the ease of stock trading, but diversification benefits of mutual funds. So same things that we talked about, a fund that can be traded on an exchange like stock, bought and sold throughout the day, just like you do stock. I mean, that's the big thing. And then this is kind of, again, what we talked about, that someone's going to put this basket together, and then we're going to buy a share of that basket. ETFs are designed to track the value of an underlying asset or index. We've talked about different indices. Commodity like gold or a basket of stocks, S&P 500. That's our Standard & Poor. All right, so I think we're good with NerdWallet. Let's see what we got here. ETF 101. So some more just talking about ETFs. Are they a good investment? How does it work? And I think we kind of touched base on those pretty good of what they are and how they. So this is Fidelity. We're going to add this one about their ETFs. If it's something that you're interested in, they have a lot of articles here to kind of touch base a little bit more, maybe explain it a little bit different. Talk about mutual funds, which one is right for you. There's different types of ETFs, right? So we talked about our indices, how to choose the right one. And if you come here on index, so these are some examples of ETFs. So IVV is the S&P 500. We have this one, which is the NASDAQ composite. Let's see if it'll show us the thing here. No, I don't think it wants to. So here we see that this is the S&P 500 index, and the symbol is IVV. So if you go on Google and you type in IVV, here's our ETF that we're talking about. So where it's at, where it's closed, you can look at 6 months, year to date, and kind of how this has moved around. And here's a little bit more about it. why you should buy the IVV one or any other ones for that matter. All right, so the next two that we have, and they're kind of connected, is we talk about futures. Right? So with futures, investments that allow you to buy commodities by locking in a certain price at a specific time without actually buying the shares. These are speculative bets you are placing on the future price of a commodity. So let's do this, okay? Talk about commodities before we talk about futures, since futures are based on commodities. We're going to come back to that one. So, going backwards, I guess, talking about commodities refer to tangible resources such as gold, silver, crude oil, as well as agricultural products. All right, so let's check out our Investopedia here. Important aspects of most Americans' daily life: commodity is a basic good used in commerce, interchangeable with other goods of the same type. So our commodities, grains, those are commodities, gold, beef, oil, and natural gas. Okay, so not companies, but items that we're using. All right, commodities that are traded are typically sorted into four categories: metals, energy, livestock and meat, and agriculture. All right, and here's a good takeaway. In the most basic sense, commodities are known to be risky investment propositions because their market, the supply and demand for them, is impacted by uncertainties that are difficult or impossible to predict, such as unusual weather patterns, epidemics, and disasters, both natural and man made. Especially when we're talking about agriculture or livestock, the weather and an epidemic can have a big impact on what goes on. Right? The majority of exchanges carry a few different commodities, although some specialize in a single group. In the US, there's the Chicago Mercantile Exchange, New York. So we have a couple different ones. And these are handling those commodities. All right. You typically don't see those on the New York Stock Exchange because they're not stock, they're commodities. So they have their own market. So here's our four things that we talked about. We talked about metals, so gold, silver, platinum, copper, energy, crude oil, heating oil, natural gas, and gasoline. All right, and we've seen, you may or may not know this, I don't know this name, OPEC. So this is who handles a lot of the investors who are interested in entering the commodities market in the energy sector should also be aware of how economic downturns, any shifts in production enforced by the OPEC, and new technological advances in alternative energy sources. All right, so those wind and solar, biofuel, those are going to impact the energy. Livestock, hogs, pork bellies, cattle. Agriculture, we get into wheat, rice, cocoa, soybeans, all those things that we're going to be growing. So this is an older article, but this was commodity prices. So this is from 2017. This is a very old article. And here we have energy. So sorry, I kind of glanced over that, but this is what we were talking about with using futures to invest. So let's talk about those here at the same time. So we talk about futures, investments that allow you to buy commodities by locking in a certain price at a specific time without actually buying the shares. These are speculative bets you are placing on the future price of a commodity, sometimes far in advance. So same thing here. One way to invest in commodities is through a futures contract. A futures contract is a legal agreement to buy or sell a particular commodity asset at a predetermined price at a specified time in the future. So the buyer of futures is taking on the obligation to buy and receive the underlying commodity when the future contract expires. The seller is taking on the obligation to provide and deliver the commodity at the contract's expiration date. So you can buy stuff ahead of time with futures and you might get good because you can get a price ahead of time and things might increase, or futures can be bad because you can set your price and then the bottom falls out and prices drop. So you can be very careful with how futures work. It can be good or it can be bad. It is a lot of speculation. All right, so back to our notes here. And this is Commodities 101. So if you need to learn more about how to invest in commodities and maybe more about what it looks like, there's several articles you can take a look at. And we were talking about futures. So let's check here and make sure we're all on the same page. Whoops. So contracts that play out in the future. All right, so didn't see a lot on Investopedia. We're here on NerdWallet. They've got some good examples here. So allow people to secure a specific price and protect against the possibility of wild price swings up or down. So airline company wanting to lock in jet fuel prices to avoid an unexpected increase could buy a futures contract agreeing to buy a set amount of jet fuel for delivery in the future at a specified price. So they're already agreeing to it. Doesn't matter what the price is in the future. Fuel distributor may sell a futures contract to ensure it has a steady market for fuel and to protect against an unexpected decline in prices. So I can sell contracts for the next upcoming years for a product I don't technically have, but I'm going to make sure I have my business in place. So both sides agree on specific terms to buy or sell, delivering it, and at the price. All right. So it's just working on an agreement ahead of time to try and avoid something catastrophic in the future. All right, and that pretty much wraps up our types of investments. Okay, so let's just review real quick. We talked about all these, a lot of speculation. Any asset you can own that might grow old and grow money. Okay, we talked about CDs, we talked about houses, stocks, bonds, mutual funds, ETFs was today, our commodities, and our futures.